Hey, what's up, everybody? This is DNA Money Podcast. We reversed back to the old format. This is more of a regular podcast stuff. We're gonna keep experimenting with the format. I think the reaction videos were fine. Didn't gather much views though so far.
I didn't find it to be very intellectually stimulating.
Yeah, it's less of intellectually stimulating conversation. It's more of just following the trends and just
Like
trying to
fun discussion and yeah.
yeah, it's a different vibe too. Like I today I wasn't super excited about doing a reaction video. Maybe we'll keep doing segments with reaction videos. Like maybe
Yeah.
in the middle of the podcast we'll whip out the laptop and just
Yeah.
react to something, and then maybe prepare a couple of news articles. I don't know. Like we'll keep experimenting with the format. I think it's gonna get better. We're still working on it. It's been the first episode we recorded was in April. April 18, I think.
Right.
Or
I think
yeah,
so. I don't remember.
something like that. And since then, I think we improved quite a bit.
I mean, we had a some pretty long break, I think, for several weeks.
Yeah.
Um,
Yeah, we had a break in August, pretty much all August. We didn't record anything.
I think it was the end of August, beginning of September.
Mm-hmm.
Um,
Yeah,
yeah.
and this month we kind of were slacking a little bit. I still haven't edited most of the videos that we already recorded. Those are
With the
the
reaction
but
videos,
they
yeah.
but by the time this one comes out, they're probably gonna be there.
Yeah. I
But
think I think it'd be good to, like, as you said, experiment with formats and maybe even mix them up a little bit, because doing the same thing over and over again, it gets boring.
yeah, well, it is a route to success, to do the same thing,
Consistency.
consistency. But you have to be improving too. There's no point of just being consistent and doing shit.
Right. Yeah, because we
Um,
want to enjoy it too.
and we want to enjoy it too. And a good conversation, I think, is always better. Also, I find that probably pulling clips, if you want to do clips for TikTok and stuff like that, we haven't done those yet. But if you wanted to do this, I think it's much easier to do from a podcast rather than the reaction video, because reaction video is kind of you're reacting to a clip already. Like
Yeah,
it's a
I think it should be a little bit of a longer video, right, than just a 30-second clip.
But for today's video, the most looming topic is, of course, FTX debacle. FTX, Binance, crypto, all that drama. We can also talk about the interest rates and the inflation reports.
Inflation report, the CPI report, yeah. And I think with crypto, what's interesting, when we were starting our podcast again back in April or May, we had the first wave of
Mhm.
some of the crypto companies getting demolished
Yeah.
by I think the first interest rate increase, right? And then we had this thing with Luna
Yeah.
coin, we had this thing with Terra coin.
Yeah, Luna Terra,
Uh,
something else also. Yeah, there has been a lot of explosions in the crypto space. I mean, nothing new really. There has been explosions in crypto space before. It's sad to see people lose billions of dollars, pretty much.
Yeah.
I'm not talking about like billionaires and people who like run those crypto scams. I mean, not all of them are scams per se, but I'm not even talking about them losing billions of dollars, but all of the investors all over
Like
the
the
world
regular
who
people.
stake their
Yeah.
life on the crypto, and like they believed in some ideas, and some of them were just stupid and believed in the hype instead of just
Delivering actual value,
yeah, like diving deep into crypto and understanding what's going on. And
yeah.
but it is sad.
It is sad, but honestly, at the same time, it's a good reminder to people that, and to everyone, that you gotta do your due diligence before investing or putting your money anywhere, right? In any project. And second, for the industry, it could be like the good side is that some of these companies that didn't have strong fundamentals or were over leveraged or didn't account for certain risks, they pay for their mistakes and they paid for their mistakes. And it's just another set of lessons learned for future companies and for current founders that survived this, right? So it's more of like a cleansing process for this industry, which sounds a little bit bad, but it's a natural.
It is bad because the people are involved. Like those companies, the problem with the beauty of the crypto and the problem with it is that it's public day one. So like you start a company, you release a coin, you're public. And now at this point, a lot of normies, let's say, get involved in it financially. So
Yeah.
whenever something goes wrong, it's not like some venture capital, super rich people invested into like this startup and it failed, and I mean it's private money. There is exposure to it. Maybe
Yeah.
I don't know. Maybe a pension fund invested into some venture, and then, but it's usually less risky, and there's few steps in between like actual like middle class people losing their money, let's say. With this, like everybody is hyping up the coin, you go buy the coin,
Yeah.
it might be
Yeah. Yeah. As you said, like it's an easier access to a new, relatively new asset class that is very risky and very volatile. And I mean, that being said, a lot of VCs and venture capitalist investors are still investing a lot, right? Like, even looking at Andreessen Horowitz, they are, but they're investing in companies that more or less have underlying value, right?
I'm
They
not
don't
even
just
saying
buy.
that the people that invest in those are like lesser than or stupid or they shouldn't have. I'm just saying that whenever it's like this person's decision and it might be their last money. It's never gonna
Yeah.
be the last money for venture capital. Even for somebody who invested in that venture fund, it's probably not their last money. It's probably like scraps. Like it's just like
Yeah, they
take it.
definitely diversify
Yeah.
their
So
portfolio and
but for the individuals that could be their life saving, and that's the problem. If Sequoia loses $100 million or whatever, A16Z loses whatever money they lose in those crypto
yeah, they'll
schemes,
survive for sure.
yeah, they'll survive first, and then second, most of those venture funds get locked in at a much lesser value. So you're probably gonna
Yeah.
buy it on the market for 25, but they're just gonna mint it for the A16Z at 5, let's say, and
Yeah, exactly. They get in earlier, they get at a better price. That's why, honestly, I think overall, and I'm maybe switching topics here a little bit, but like democratization of access to various asset class. For example, looking at like sweater VC.
mm-hmm.
Maybe you saw like an ads on Instagram or somewhere else.
No.
Basically, it's like you can invest in a fund as easy as you would invest in a public market, or Cadre.
Mm-hmm.
I think I'm pronouncing that correctly. Like you can invest in real estate as easy, right? They just take your money and then they manage it as real estate investors. Or what was the other one? Where you can invest in a hedge fund, Titan.
Mm-hmm.
Titan allows you to invest in hedge funds, right? And then they manage or they manage their your assets or your money as they would run a hedge fund, and therefore you have access to that. But I don't think you ever will have good enough of returns with those types of companies. I think that it's still like you need to at least with VC, for example, right? You don't have any influence
Mm-hmm.
over what's been invested or what's the company what companies you invest into. You don't have any like perks or benefits of potentially getting connected to those people.
Mm-hmm.
And
So
You
you're saying in VC you do have that benefit.
in VC, in traditional VC,
Yeah.
yes, you do.
But if you go through this platform,
Yeah,
you don't get a lot of
I'm quite
benefits.
sure that the return on investment is going to be subpar
Mm-hmm.
compared to like if we're talking about real estate. If I invest through Cadre,
Mm-hmm.
right, and get certain percentage there of return versus investing in like a fund that, let's say, I don't know, you run and you're a professional let's say you're a professional real estate asset
Mm-hmm.
manager, that I'm sure like you'll generate a higher return for me.
Mm-hmm.
So like this, and why people do that, why people build these apps, I think, yes, it's cool that they're democratizing access,
Mm-hmm.
but also they can raise small amounts of money from millions of people, which means that it's actually easier to raise this money,
Mm-hmm.
and these people don't have as much influence on you.
So in the end, the rich benefit more than the people investing.
I think so, yes.
Yeah,
I think so.
it is. It is a challenge. I think it's overall good that you have more choice. But with choice, yeah, I mean, it's hard to say if it's good or not. I think it's in a gray area. I think it's good and it's bad.
It's good because you have exposure.
With the classical formula, you're just not gonna get the chance to invest in that hedge fund. Let's say that's
Right.
first. But the other thing is. In a traditional form, you have to qualify as an investor,
Accredited investor.
accredited investor. So, and those rules can be tricky because I don't know. Let's say
You have to be making. You have to own, like let's say either more than $1 million in assets, overall,
not including your home,
not including your home,
yeah,
or you have to make more than, I think,
250, yeah, I think,
per year,
or 200 or 250, something like that,
right?
which is kind of high. I mean, how many like 4% of Americans can qualify for that? So it's
Right.
like it might seem that the game is rigged, but I think this actual like people's love for like investments and all that lately, it's been too much. I think
I think
actually,
it's like hyped up over the past couple
yeah,
of years,
it's
right? With the bullish
the hype
markets.
is too high because I think the best thing you can do if you are not making $250,000, even if you make $250,000 a year, it's not investing in stocks or anything like that. Like you can keep investing your 401ks with your job if they're matching, but other
Yeah.
than that, like just it's a waste of time. I believe it's a waste of time. So what like think about it like if you had a choice and let's treat the investment as an expense because pretty much if you're investing for a long term it's as well it's like might as well be an expense, right? So like because if you're not planning
Yeah.
to like
Liquidate.
liquidate it,
Well,
so
but like, well, depends on the asset class, right? Like,
let me explain.
okay.
So let's say you invest in Meta. What would be a better investment for you to make? Is it going to be to invest $5,000 because you're not making that much money? You probably saved like $5,000 um, doing your regular job because you're making, let's say, $100,000 a year. You saved up $5,000. What is the better choice? You investing in Meta or you buying Meta advertisement? I think
For like your project.
for your project, your product, for yourself, even promote your Instagram, your
Yeah.
other
Yeah.
like newsletter or something. So
Yeah.
with the first one, well, Meta is at 250 today, which is kind of another topic, but it went from to
price per
$50
share?
billion dollars.
Oh shit.
Yeah,
The market cap. Okay.
yeah, market cap. So it went down from a trillion to 250. Went down 4 times. So it could have been your investment too. So the best it can do probably in the next few years with the current interest rates and stuff is probably going to be like, well, the very best it can do is $1 trillion. I mean,
You mean
not a
getting?
financial advice, but
You mean it could grow back up to $1 trillion
yeah,
in the
it's
best
the
case
best it can
scenario?
do with this economical environment, I think. Which is forex, which is very good, but the chances of that happening are minuscule, and it's gonna take you 5 years. Where on the other hand, you can invest $5,000 into Meta advertisements, and with that you can generate any amount of money, pretty much,
Yeah.
and you can do it very fast. Like
Yeah.
$5,000, if you're conservative with your investment in advertisement and you're trying to tweak it and like play with it, probably hire somebody to do it for you. It all can fit in $5,000. They don't cost that much, and you could like in a week you could generate 10,000, 20,000. You can reinvest that money. Maybe you lose that money, but you gain the skill of like hiring somebody who does marketing for you, building a
Yeah.
product, like
But I think,
copywriting. You get a
yeah.
lot of skills with that too, and just the benefit of it is so much higher than just for you to invest in meta
I
stock.
mean, yeah, overall, yes, I see your point. Definitely, like the return, like the ROI will be higher. And like, yes, you can lose everything. Whereas with if you invest in, let's say, Meta, and we're taking that example, then downside there is limited. But yeah, at the same time, you have to be willing to invest something else besides your capital, which is your
Yeah.
time, right? So if you have ambition to
Let's
work
be
on your
honest.
own project,
If you're not super high earner, you probably have time.
yeah.
Like,
But what I'm saying is like you have to be willing to do that. It's not just like putting money aside or like even let's say you run a project, right?
what's easier
But
to
then
come by if you're
no,
if
wait.
let me make a point.
Okay.
What's easier to come by if you are making like you're working a regular job? What's easier to come by, an extra 5,000 or extra few hours? Probably money comes hard to you.
Wait, what's easier to?
Come by extra time or extra money, because you're not making much money. So extra time you have.
You have extra
You
time,
don't
yeah.
have extra money if you're making less money. So like your asset that you really have is time, and you should invest it in bettering
Yeah.
yourself, learning new skills.
But you have to be willing to do that. It's not
Yeah.
that like you can't
Well.
just let's say you're running a project and but you're not dedicating enough of time of that. Throwing like 5K at the advertisement is not going to help you much
Mm-hmm.
unless you do your thing and like keep improving the project, keep building
Mm-hmm.
I don't know whatever you're building. So in that case, yeah, I agree. But I think it's all like coming down to investing in yourself
Yeah.
versus putting money somewhere else.
But I thought of it as just a good example because like with Meta stock or you invest in Meta ads, what's better? I mean, obviously, the second one. The other thing is you have $1 billion, and then and you raised maybe $1 billion or whatever. Um, what's better at that point? Because you cannot just dump $1 billion into Meta ads. At that point, maybe you can buy a stock and just like it's gonna be better for you, right? So,
And lose 750 million.
well, that's an option too, right? So yeah, I think people are too
Yeah.
hyped up about investing in crypto, and frankly, they don't really understand what they're
Yeah,
doing.
and I guess going back to your point, if you look at how much small businesses grow in the first couple of years, I think it's something like 150 to like 250% a year, which makes sense.
Yeah, I
I'm
mean,
saying
it's
that
just hard to tell what's like every small
revenue
business is
growth.
different. So, for example, if I'm just starting my business and I get to like making 10,000 revenue a month, how much did I grow? Like a billion%? I don't know. Like hard to
Yeah,
measure.
no, but I'm saying like I
Hmm.
think that's the statistics and like it's hard to beat those returns
Yeah, pretty
initially.
much impossible.
You're not gonna sell the company that well, you can sell it that early depending on different factors, of course, but yeah, overall, if you want to grow your own project, as you said, yeah, I think it's a better investment.
If you want to make money, it's a better investment. If you're not making huge money already. If you're making a lot of money already, you don't know where to put it. Put it in.
Yeah, the opportunity cost here is also a good one to take into account. Because like, how much is your 1 hour worth, right? Is it $20 or is it $5,000?
Yeah. If it's
Yeah.
$5,000, maybe.
You gotta outsource everything,
Yeah.
even your laundry and fucking everything.
Yeah.
By the way, it's an interesting mindset exercise where I remember listening to Naval's Ravikant's the CEO founder, no longer CEO of AngelList, and he's also a prolific angel investor. And he was saying earlier on in his career, he treated himself as his hour was worth $5,000, and he wouldn't do anything else like besides the project that he was working on, unless he thought that the value that he would get by doing that activity exceeds him working on a project.
You know, I fell in that trap before. I wouldn't recommend.
You tried that?
I tried that back in the day, like 4 years ago, maybe.
Okay. Well, what was your hourly rate?
My hourly rate.
Assumed hourly rate.
Well, my actual hourly rate at that point was $37 an hour. But my assumed hourly rate, I was like, I'm not gonna do any activities that are under $100 an hour. And the way I imagined $100 an hour activity was way off. But, and I tried to live by that. The result of that was
depression, stress.
yeah, that too. But you know, in the beginning of a business, you have to do a lot of activities that don't scale, and you start putting too much pressure on doing it on yourself with doing activities that do scale, and it's hard to quantify, like, because you never made.
What do you mean activities that don't scale? Like setting up a company, like the legal stuff, or
Let's say you're trying to promote your project, whatever it is.
okay.
Which activities do scale? Well, dumping a lot of money on Facebook does scale, right?
That helps you to grow.
Yeah, like you can scale
Sales.
it and up to like billions of dollars. Is that a best approach to launch a product and start a company and build a brand? No, that's the worst. Because unless you have $1 billion to spend on it. So in the beginning, the best thing you can do is probably like, I don't know, email 100 people, just type in, find them,
You mean that? Okay.
type it in, and is typing in an email like a $5,000 activity? I don't know. It depends. Like, you may perceive it that way if you have that perspective. But like, I wouldn't say.
I see what you're saying. Yeah. Well, it's more about understanding in what direction and how you want to scale, right? Because when you're emailing someone, it's more about customer discovery, understanding what they want, understanding if there could be like a product market fit.
Because that job in a corporate company, that job is gonna be done by like a clerk for, I don't know, $15 an hour max. And in some state where the minimum salary is like $7.
Yeah, but you want to do it yourself, most likely.
You want to do it yourself. You want to do it a lot, and you don't want to spend a lot of money on like crazy stuff.
But the return on this is actually, I would say it's very, very high, because how I view it is like, again, when you do that exercise, let's say you're pointing an arrow, right? And let's say you want to release an arrow in a certain direction. Pointing it in a direction is really, really important, because even if you're gonna be slightly off by like a small angle, like overall that arrow will fly in a completely different direction, right? So you have to make sure that you point the arrow in the right direction, and like that's what you're doing with this exercise. I don't know if I'm being too metaphoric.
Maybe you're being too metaphoric, but I think you're right. I mean, that's why I'm saying it's probably the best thing for you to do. But it like for an unexperienced person,
Yeah, it
it's
doesn't seem
hard.
like it's
It doesn't seem like a very $5,000 an hour activity, and it
yeah,
isn't because it's like I'm saying like clerk is gonna do it for
yeah.
15,
It doesn't require
but you
high
cannot
skills.
pay that clerk 15 because you haven't earned that money yet. So
Yeah.
it's I don't know. It's a trap for it's a dangerous trap for an experienced person.
I would love to try to do it. What I think will happen to me is I can't be always productive,
Mm-hmm.
right? If let's say I outsource laundry or cooking,
Mm-hmm.
right? And I'm better like ordering as simple as ordering it on DoorDash rather than cooking myself. Like you got to make sure you don't spend that hour or half hour on Instagram or like watching YouTube videos because otherwise it'd be stupid. And I think that there has to be a right balance in everything. Like you can't just work all the time, um, because you're not going to be as productive.
Yeah.
But I would still like to try it. I don't know.
So what's going on with FTX? Tell us.
Yeah, FTX. I'm by no means an expert in crypto or anything, but I think it's quite an interesting story where, you know, that we're seeing now, and we're still like seeing how the events roll out and what's happening. A lot of it are like rumors, and you know, there's no definite facts um, yet. But at the same time, some of the story is understood, right, or is understandable. So what happened is FTX, as you guys probably know, went down. They filed for bankruptcy, so they're no longer.
Did they file for bankruptcy
Yeah,
already?
they did file
Oh.
for bankruptcy couple of days ago.
Mm-hmm.
And the company was worth $36 billion, I think,
Yeah.
and now it's worth almost zero. So the backstory is quite interesting because why it happened was due to not only like FTX doing incorrect or wrong things, but there's always a trigger event, right?
Mm-hmm.
For something going down. And in this case, the trigger event was done by Binance. So as far as I know, FTX tried to lobby against Binance, and they did it because Binance was becoming too strong of a competitor and was trying to
Binance
monopolize
is
the market.
for context. Binance I think is number 1 worldwide, and FTX is number 2 worldwide crypto exchange.
Right. Yeah. And Binance they're based in China, right?
And both of them are based in Hong Kong, I think.
Both of them Hong Kong.
Binance actually, the CZ, the founder and the CEO of the Binance, he says he's decentralized. He's not Chinese, and he's very offended by being called Chinese company. So I think he said, "Oh, I even spend more time in Europe now than I spend in China." So that's nor here or there, but
that's interesting. Yeah, but if they're based in Hong Kong, they're based in Hong Kong.
I don't
know. Yeah, and so basically what happened is FTX started lobbying against Binance because Binance was monopolizing market. As you said, they're the biggest exchange in the market.
Mm-hmm.
And CZ didn't like that. I think he even tweeted something like, that they don't like their competitors going behind their backs and lobbying against them. And so what he did, he started offloading and selling his the FTT, I think those coins are called, the coins that were released and they were issued by FTX, and how he had and those coins were worth I think around $500 million. So what happened there and how he got them in the first place was because FTX acquired a part of Binance. So they invested in the company, got some equity in return. How they paid was in their coin, in FTX coin, because it was quite stable at that time, right? And so again, the overall value was 500 million, and Binance CEO, so CZ, started offloading that. That led to the decrease in price of that coin. What also,
And plus, CZ has kind of a cult following, I'd say, and a lot of people in crypto listen to him. When he says I'm offloading, and everybody can see, of course, because it's crypto.
right,
When he says I'm offloading like all of my FTT, fuck that
position,
guy. Like everybody listens,
yeah, a lot of
and they
people will
start
follow
offloading
him.
it too. So
Exactly, and there's several factors. One, because he may know something that no one else knows, right? And it's a major red flag if he like starts offloading a position like in full.
like if Warren Buffett would come out, like it's a smaller world, crypto, but in a giant world, if Warren Buffett would come out and say I'm like
Selling
fuck
coke.
Coca-Cola, I'm selling
Yeah.
it all, and like that would probably countries would collapse.
The country would collapse.
Some countries, and I'm not
Some
saying
countries. Yeah,
yeah.
no, exactly. It's a good example. But another thing that was happening is FTX was another company that Sam was running, and I honestly don't remember. It was a part of FTX. I think it was a separate entity, but they were all registered under one umbrella, Alameda Research Group, which was like a prop desk where they were trading different. I think it was just crypto, so different crypto coins. What happened was Alameda held a lot of FTX coins, and the coin was quite stable, right? So they could take loans against that. They could take loans, and then they could use that money to trade, right, and to generate more funding. So what happened was basically once CZ started selling off this coin, the value had started decreasing, and therefore the collateral that Alameda Research used in the form of FTT or FTX coin, it started being reduced in value. So the loan issuers started requesting more money or more collateral, and you had to sell more coins or more of your assets in order to give it back to the banks or the loan issuers. And what started happening was the chain reaction where everyone was started selling those FTT coins,
which is, to be honest, kind of normal for companies to borrow on their stock. You just don't expect it to go down that fast, and
because usually stocks, if you use the stocks, right, they still have some fundamentals and like underlying value.
well,
Here it was a bit different.
it was pretty similar, but yeah, and so as a result, a lot of people got screwed.
Yeah, employees got screwed
and
over.
it pulled down the
investors.
entire crypto market, and not only crypto too. So, like stock market, everybody got affected.
I don't think stock market got affected by that too much.
Well, that day everything was down.
Yeah, but it was also down because of the CPI. No, it wasn't the CPI. No, it was the interest rate hike.
Yeah, it was. So there is a lot of stuff was going on.
Yeah, I think now it's a interesting time where a lot of things are happening with like midterm elections, with this crypto thing, with interest rate hikes, with the CPI report, and it's hard to understand the cause and effect relationships.
But the CPI news are pretty good, right? So finally, we see the positive signal from the economy that the CPI, for everybody who doesn't know, the CPI is the metric by which they measure the inflation. So how much you lose in like value if you hold dollars. So for the first time in this year, it started falling. And that's a very significant point and very bullish for America, I believe, because right now Europe is still sliding pretty hard. British pound super bad. Yeah, pretty much all of the world currencies are sliding except Chinese yuan. So
Yuan.
whatever.
Yen is
So
Japanese.
yeah. Um,
Except ruble too.
well, ruble is the inflation numbers are high. It's just not sliding compared to other
Compared to dollar.
currencies. Yeah.
Yeah.
So the inflation in Russia is like 14% too. So or 13%, which is very surprising that for the first time, and I think ever in my life at least, British pound inflation was around 13%. It was kind of higher than Russian inflation, which in Russia we were used to like seeing double digit inflation every year, and like sometimes it was 20, sometimes it was 10, but it was pretty bad all the time. And in British pound would usually hold up like 2-3%, which is great for currency. Right now it's reverse, and I think it's very dangerous for Europe and all that space. But for America, for the first time, we started getting our inflation numbers back. I think that's good. Of course, it creates a lot of tension on like trade side. It might fix the trade deficit. Might not. We might start importing a lot more though.
Oh, you're saying okay that the inflation, it's cheaper to, it's more expensive to import to export
It's
stuff
yeah.
from the U.S.
It's less viable to export stuff from US.
because it's now more expensive
It's now more expensive for everybody.
for the importers.
Yeah, and it's much easier to import right now from the United States. If you're importing from anywhere in Europe, Britain.
Yeah, because it's cheaper, so you can.
Yeah.
Yeah.
So that might create a lot of imbalances in like world trade, and with like
Yeah.
economies putting different tariffs and stuff on their trade, it's gonna be hard to like balance it out, because whenever there is a lot of tariffs, there is a lot of bureaucracy around it, and like to reverse that bureaucracy in case something goes wrong. So like on an international trade, it's gonna be a difficult situation, I think.
Mm-hmm. And with the CPI report, do you remember what the numbers were? I think it was the latest number was at 7.7%.
7.7 or 7.6, something like that. So down from 8.3.
8.3 from the last month
Yeah.
to 7.7, and it came lower than expected, right?
Yeah. That's why
Yeah.
all the stocks were.
But like, if you look at the not the last month, but the month before that, it was also lower than expected. When like people started talking about deflation.
Did they?
Yeah, they're like, oh, the inflation is not happening anymore. Right now, it's deflation. We're gonna have problem with deflation where the prices are gonna go down, and there's gonna be like another problem. And then the next month, the numbers were higher again. I don't know. No, I think it's interesting. At the same time, I think the unemployment rate is still quite low.
But that's gonna change. I feel like that's gonna change.
Right, and Fed wants unemployment rate to get higher.
Does it?
Yeah, it wants it to be higher, and because that's how you also can decrease inflation, because I guess the consumer spending power will decrease, and therefore people will spend less money.
That's a brutal way to look at it.
Yeah, right.
For
But that's what they're doing, and I think we're gonna see with like, well, at least with the tech industry having mass layoffs, right? Like look at Meta,
that's
they
gonna
just fired
trickle
like
down
11,000 people.
Yeah, because I mean, these people were making a lot of money. Like some of them, like on average, probably hundreds of thousands of dollars. And of course, if that income is gone, the whole economy is gonna feel it. So we're gonna see more layoffs. I think in tech for sure, we're gonna see more layoffs. I don't know if,
Where else could we see? I mean,
real estate
as what companies?
mortgages, mortgages already laying off people. I think they started
Like
even like
banks that are
banks, financial companies, um, anything related to mortgages. Like there's it's a whole space. Um, like
what about
real estate agents.
construction too, you think? Do people invest now in like real estate development and building out new houses and
I think they do because the base is low, so that might go up. Because during COVID there was no construction pretty much, and
because
right now
everything was
we're
too expensive?
no, we
Or
just couldn't really construct anything.
oh, you mean during COVID times?
Yeah,
Yeah.
yeah.
Okay.
So right now we're ramping it up. I think that's gonna still keep going. I don't know if it's gonna be as big as it could have been, but I think that's not gonna affect the job market much. But there's a lot of things that can get pulled down because everybody, like on free money, everybody overhired. I don't know how they're gonna
Yeah.
deal with this,
Yeah.
especially tech, especially tech.
Remember the times when even like fast food chains were bringing up the hourly wages to hire people because people just didn't want to
Yeah,
go and work.
I don't know if that's gone. That was due to another issue. That was due to like government overpaying like everybody, just throwing down money,
Yeah, the
and nobody just
stimuli
wanted to work.
checks.
Yeah, for like McDonald's wage. But it's kind of getting ridiculous in Los Angeles right now. The minimum wage is $16 an hour. So
Did they just increase it
yeah,
a
recently.
couple of months ago? Yeah.
Yeah. So and
Yeah, man.
I think there is even a law, or I don't know if it passed, but for big chains that are over 80
Employees.
no, over 80 stores, I think they have to pay like $22 an hour
Wow.
minimum wage. So in California, so it's kind of crazy, or in LA, I don't know for sure, but
Yeah.
it's getting up there. So I don't know how that's gonna affect stuff because right now everything is shrinking down, and they would want to shrink down these salaries too. I don't know, but we'll see. Yeah, I think that
We'll
was
see.
that was a good episode. Next time we'll keep experimenting with the format. Maybe we'll bring up some more clips, make it more engaging for people. But for now, I think this episode was
Pretty
good.
good.
I suggest everybody should subscribe, like, and
Follow us.
yeah, on
Leave
YouTube
comments.
or whenever you hear it, wherever you hear it. Okay,
Yeah.
bye bye.
Thanks, everyone.